What's happening, DeRosa Insiders? It's Matt Faircloth. Welcome to the Cash Flow Digest. My name is Matt, and I am here to talk to you guys about all things real estate, all things cash flow, all things real estate investing, all kinds of cool stuff in general. If you're watching this program in the DeRosa Insiders Facebook page, I am super grateful for you guys because what you've done is shown your commitment to the DeRosa Insiders community, joining that free. How many things are free in this world? DeRosa Insiders is. Go to DeRosa Insiders and join it for free, where you can talk all things real estate investing. You could be a cool kid like this person right here did. What they did, they can actually make a comment and say, "Hey, Matt," and I can say, "Hey, you, how are you today?" Right? And they can watch this program live when it goes out every Friday at noon Eastern. It's about giving closer access to people, to the DeRosa team, so we can talk real estate shop with you guys, so we can help you guys raise your real estate game and get your companies to the next level so that you can destroy your goals for next year for real estate investing, for multifamily, whatever it is you plan to do. We got a great show coming at you guys today. And it's great because of my joined co-host, my partner in crime. He actually just really keeps me out of trouble. I joke that he's my no man, but he's actually somebody that really kind of steers the ship. I'm just a pretty face. He's the one that's actually operating the machinery here. You guys all know him. I hope you guys love him too, like I do. This is the Justin Fraser. How are you, Justin?
Hey, everybody. What's going on? Cash Flow Digest in the house. What's up, Matt? How's your Friday going?
Spectacular. I'm doing a lot of
Awesome.
I'm hoping I can maintain my voice today. Justin and I are going to do a year in review because I can't believe we're already at the end of the year. But we're going to look back on 2023 and here at DeRosa and talk about some things that we at DeRosa have learned, highs and lows. Not every day. It's not sunny every day at DeRosa Group, but most days it is. So for those lows that we had, we're going to talk about those. And we'll talk about some highs and some really cool things that came down the pipeline, lessons learned, all that kind of stuff, right? So if you guys got some gratitude you guys want to share for 2023, share it in the comments section, right? We're going to do some hindsight and we're going to do some foresight, okay? So Justin and I are going to get to look back on the lovely year that we had together here at DeRosa. And then we'll spend a little bit of time looking forward. I'd love to hear you share in the comment section. If you guys are watching this thing on YouTube or on Spotify, put in the comment section some of your big wins for 2023, and I'd love to shout them out as well here. But Justin, we're going to be looking back every year. It just kind of like what I like to do is on my birthday and at the end of the year, look back on what worked, what didn't work, and then what do I want moving forward. So my birthday's in October. End of the year for me, anyways, January 1st. So that's when I like to look back and look forward. So now let's you and I look back on 2023. What are some of your let's start with the good stuff, right? Some of your highlights on 2023, when you think back on our growth as a company, what are some things that you're just over here like high-fiving us for doing?
Oh, I think the best thing we did by far was staff up. The way we staffed up this year, the people we brought onto our team is my favorite thing that we did this year, because we have been very deliberate about collecting great quality, talented people on the DeRosa team. Mm-hmm. And that has made all the difference for us in our business. And I just can't wait to see what this team we built is going to do. And we're still hiring, by the way, which is really exciting. Bringing great people in, number one for me for this year.
Yeah. And I mean, it's funny because you can't pick which one's your favorite, but I was talking to my wife the other day. I was talking to my wife the other day about, our company. I said, I'm surrounded by the best people I've ever been surrounded by. And then we make another hire. And then we make another hire. And it's like, no. Okay. That now even better, with regards to the people. So that's what I would say. And this is true of any, because we'll get to the low if we will here. But like, as the economy continues to shake off like a dog that just came in out of the rain, while that's happening, it's important to prepare yourself for the next level and for the next level of the economy and for opportunities that may come up. For anybody here watching, that as the economy is growing and booming and lots of infrastructure, things are fueling and growing out, that's not the time for you to be preparing internally. The time to prepare internally is now, is when things are in transition in the economy and we're preparing for the next bump and the next rise. Now is the time to be hiring, to be looking at your internals of your company, making sure things are functioning properly, because you don't want to get caught off guard. You want to have your infrastructure of your team and your processes and your relationships and all that really battened down tight, preparing for the next bump. So I'm proud of us as well for attracting A+ team members to DeRosa. I refuse to use the word employee. These are team members for DeRosa. Yeah. They're helping us toe the line. It's their company too. That's the way I view it. So
absolutely,
that's the story, and I'm sticking to it.
I got some other great wins for this year too, but that if I had to pick one, that's the top one.
Yeah. Okay, cool.
What about you?
Give me another one.
We have done a lot of work as an ownership team, as a leadership team of this company. And we have hired a coach. Actually, we started with our coach last year, a business coach, but really going from Q4 last year into this year, we picked up a lot of tools and techniques, ways of communicating with each other as a leadership team, ways of prioritizing, ways of discussing where we want our company to go, how we want it to go. An output of that is the great staff we just talked about. But man, even though I'm down here in North Carolina, we're still meeting in person about once a month, maybe every 6 weeks. And so we've done that through the year. And pretty much every time we all get together, you, me, and Hervé, we come up with some great decisions. Like we're really reflective on what's working. We call each other out and we constructive criticism, right? But we also are all on the same team. And so we're working towards making this company even better. Pretty much every time we get together, we decide on a new staff member, we need to hire a new role for the company, which is great.
I was joking at that. I bet you're right about that. I feel like every time we've gotten together, we've like, oh wow, we're doing pretty well. We need to hire somebody.
So we've also had some times where, awesome, which will lead into the big thing we didn't do this year, but we've let each other off the hook on certain things, and we've allowed each other grace to grow in each of our roles. We pushed each other, and so getting on the same page as a leadership team, bringing in coaches, bringing in someone to help us be better, allows us to be better leaders. And I think that the output of that is immense. And so I'm very, very proud of the work that we've done this year.
And that goes to something that some would say is a bit of a miss for 2023. You want to do deals. You want to grow. You want to take on new opportunities. We all want the challenges. We all want new mountains that we're climbing, right? And so at a glance, this is a miss because we walked into 2023 with a acquisitions goal. Right? We have not bought anything as a company in the last 18 months. It's not through the lack of trying. I'll tell you that. I believe the last time I heard that we underwrote or air quote evaluated over 300 opportunities. Okay. Wow. And made multiple dozen offers. I mean, there's a lot of duds in those opportunities, right? A lot of, but we made offers on multiple dozen of those, made it to best and final on a small handful there, but missed on everything and that. So that is at a glance a miss. Right.
We're a real estate company. So you would think that we'd be buying some property and we didn't. But why is that okay, Matt? Why is it okay that we didn't buy property this year?
Yeah. Well, because we would have been forcing a square peg into a round hole. The reason we didn't buy properties is because the asking price that the seller was asking us to come up to did not make fiscal sense. And we would have had to be more conservative than we are willing to be. We would have had to kind of hope that everything goes in the right direction without any chance at all for blips or faults in the market or whatever it may be to do the deals that came across our plate. Initial offer was what we could have bought it for. But as you know, in a lot of these arrangements, it's, hey, this is what we're offering. And then the brokers, because they're just amazing at what they do, are able to get people 10, 15% up, even in today's market from their offer price, And so I think, maintained our discipline. So that's what I would say is a huge win, is that we've not chased the market to say, okay, the market's going here, let me chase. And I see people, not throwing rocks at anybody, and I wish them all the best, but I see people put out on social or out there still doing deals and buying properties. And I'm just like, I'm not sure how they're going to make that deal work. I wish them all the best, but I do not want to be someone that's losing sleep overnight saying, geez, I just bought this deal. How's this going to go?
Short term.
Paid. Yeah.
Great. Acquisition fees, bring on more assets, chance to pop the champagne and celebrate. But, long term, as we know, that then turns to the management team. And if we are wishing and hoping for rent growth or hoping that costs come in lower or that renovations are not, we can't wish and hope. We have to have a solid plan. And if our solid plan doesn't work out, we're not going to chase prices up. It's extremely frustrating because often I'm the one driving to South Carolina, go check out this property, check out that property. And I love doing that work. But, so often this year, it's just resulted in no purchases. But, that's okay. We work through it. We are sticking to our fundamentals. And, part of that is show strength and discipline to be able to not chase it. It would be very easy to, bring our price up by another $1 million, right? Well, you just change it in the Word document, right? Another $1 million, whatever.
No problem.
Then we're stuck and then we're in trouble. So
well, I think it goes back to this, because you've taught me, this is one of your favorite things to say, is don't pop the champagne yet. Is it when you buy a piece of real estate, you cannot celebrate that, hey, we won. No, they're like, it's more like, hey, the work has just begun. And the win really happens once you start achieving your business plan, and once you've made investor distributions successfully out of cash flow from the property, once you've maybe even sold it or recapitalized it in the future. That's really when you ought to reach for the bottle of champagne. You should reach for the tool belt once you buy the property for the first time, not the champagne. Ooh, write that down, hashtag. So
I like it.
yeah.
But
the bottom line is that we, and what we tell our students to do, and as a company, what we don't do is to build a company that is reliant upon acquisition fees to stay afloat. And there are other companies that are singular focused on doing deals to keep their lights on and to keep their bills paid, and personally and in the company, right? They don't have the luxury of waiting. They've got to keep doing deals and cross their fingers and hope that deal is going to do well, because they need that acquisition fee. At DeRosa, we've pivoted into other revenue streams and other ways to keep our investors happy and to stay excited. So we're not chasing a market that's getting a little funky for a little bit, but I think is going to be phenomenal in 2024. But for 2023, let's just say it's been in transition, to say it nice, right? At DeRosa, I'm proud of us that we have not done a deal. And so some would call it a miss. I think I'm proud of it, that it's something that we have not done intentionally, and for a lot of good reasons. But what it's caused us to do is to focus on tightening up the assets we have. Number one, take what you've got and make it run really well. So we've been really focusing on our current portfolio, getting it cash flow and getting it healthy, right? That's number one. And then investors still have cash that are looking for a home. There's a record number of, I kind of hate this term because it kind of sounds like a bomb, but dry powder, but there's a record number of dollars sitting on the shelf looking for a home that some would call dry powder, that's looking for a place to go. And so at DeRosa, we built out the DeRosa Income Fund, and that was launched this year. Phenomenal success. We did it without having to buy a multifamily asset, right? Yeah. And that's it. Justin, your thoughts on creation of a new asset class for us, a new direction. Yeah, we're still multifamily at our heart. Money needs a home too.
Just because we didn't buy a deal doesn't mean that we weren't doing much. We actually, this fund is one of three massive undertakings we've taken on this year. And so we're going to talk about all those, but you don't have to be just doing deals. As you said, we can diversify multiple income streams. We are a company. Yes, we're a real estate company. We want to be buying property, but we've got other things going on. So Income Fund, absolutely. DeRosa Income Fund, something that we were able to launch this year. It is not a multifamily fund. It is not the traditional flavor of ice cream we've been offering. It's not just a pure syndication on a property, right? But it is a way for people to earn a fantastic return on their money. And so it's something that we're leveraging our experience, our relationships in the industry to place money into some really well-performing projects. And that allows us to pay our investors a really well-performing rate of return. And so,
yeah.
I love that we figured this out, because it's something that we weren't quite sure if it was going to work last year. We kind of stopped and started a few times, but this year, not buying deals actually allowed us the space and time to really put some effort into to launch this the right way. And it's gone very well so far.
And so the lesson there for our students and for those listening here is that we did not take our eye off the multifamily ball, right? Multifamily is here. We're keeping our current multifamily healthy and injecting more attention and staff and cash and all that into multifamily, which not going to go there yet, but leads us to probably one of the biggest celebrations we have is in changes of the way that we're going to run our multifamilies, right? So that's our core business. But for those of you guys watching that want to grow and scale your multifamily business, yes, do that. But don't live and die by it. Don't live and die by multifamily, because you can't change the market. The market maybe needs to take a little bit of a breath and do what it needs to do. And while it does that, maybe offer something else to your investor base or whatever that may be. For us, it was a income fund that offers short-term bridge debt. It's that. But for those of you guys watching, it could be something else. But keep the eye on multifamily while you maybe do this just to keep things going, to keep your investors happy, to keep the trains running on time. Now is a good time, I think, to try on maybe a little bit of a diversification, because again, if you don't diversify a little bit, then you're going to be stuck to just multifamily, and multifamily might need a time to take a breath for a minute, right?
Absolutely.
Yeah. So Justin, we've decided to take matters into our own hands here at DeRosa with regards to
initiative number 2.
Yeah. Yeah. So the income fund is number 1. Number 2 is, go for it.
We're launching our property management company. So
we decided to do that this year. What?
Matt has been telling me, Justin, we need to manage ourselves. Justin, we need to manage ourselves. And what do? I say, no. We weren't ready. Now, what changed this year? 1, we had the space and time to do it because we were not bogged down by acquisitions. 2, we brought in the right people. Again, that was the thing I started the show with. We brought in the right people. And so by bringing in the right people, we're able to have the team that has the experience, the capability to build a management company. And, we didn't just pull the plug on our current relationships and say, we're going to figure this out ourselves. We spent all year working on this, laying the groundwork, traveling to talk to people that built their own management companies, interviewing folks, what worked, what didn't, meeting vendors, really laying the groundwork, because it's not something we take lightly. This is a company that is going to have a lot of staff members. 38 staff members are going to be in this company working on our properties. There's a lot of stuff coming in and out. We need to do it the right way, professional, employment handbooks, HR, all the things like a big boy company is going to do, right? So we've really laid the groundwork and set out to build it the right way. And so very excited to announce that in 2 weeks' time, we take over our first half of our portfolio. And then by February, we'll have the entire portfolio under self-management. DeRosa Living is the name of that company. We're very excited to announce it. Very, very pleased with what's happened so far. So it's a great initiative and led by some really great team members of ours. We are not doing third-party management. I know Matt maybe wants to do that eventually, but this company is built to service our existing portfolio and can do so in a way that's going to really allow us greater control over our entire asset, our asset
so
portfolio.
We got volunteers. Eric Platter,
Eric wants accounting and
my
finance
favorite
help.
plant controller, wants to know if we need accounting and finance help. Eric, hey, you got the methods to reach out, brother. I just reach out to Justin. He's got plenty of time. Guys, if you live in North Carolina and Kentucky and want to be part of the growing juggernaut of the DeRosa team, hey, we'd love to hear from you guys. And that's hashtag call me.
Yeah. We've got all kinds of stuff going on. But yeah, look, DeRosa Living is going to be a way for us to optimize. Matt, when you said we weren't buying, but we're kind of optimizing the stuff we have, DeRosa Living allows us to supercharge that, because no longer do I have to call a third-party management company and try to convince them to make this higher or give out a bonus or question certain things. Now it's in my direct control. These people are going to be my employees, and so we get to have that level of control to support our existing portfolio. And so it's going to be huge for us. It's a lot of responsibility, but it's really going to accelerate everything we're doing with our existing portfolio. And hopefully people, as we do get back to buying, we'll slide new assets right into this, and it just gets stronger and stronger the more properties we have.
There you go. There you go. So a lot of growth that can happen there, guys. And really, I can tell you, starting our own property management company, I owned a property management company that managed 115 units in Trenton. Almost all of them were mine. And then Justin and I and Hervé are about to start our own PM company venture at DeRosa Living, right? I can tell you firsthand, property management company, owning a property management company is not something you're going to retire on, but it is something that will give you phenomenal control of the assets that you own that are going to be giving you long-term cash flow, right? It is a control mechanism in owning your property management company, because you can run things the way that you want to run them. You can run them under your own standards. You can respond to things under the timeline that you think that they need to be responded to. And you kind of are captaining the ship. It is by far not it's profitable, but it's not profitable to the point where you're gonna retire on it, right?
The goal of this initiative is not to get rich; it's to have that greater control to service and support our existing portfolio.
Mm-hmm. Yeah. So Justin, DeRosa Living, big pop there. And last thing, in that we've integrated, and this is something that I've learned a lot through our work with Bigger Pockets, through the Bigger Pockets multifamily bootcamp. We've gotten more into trying to expand the know-how that we've created at DeRosa. So by trying to create the folks that have drank the DeRosa Kool-Aid, that get transforming lives through real estate, that understand that we want to do right by other people and give people a better life as our tenants, our investors, and those that work for our company. And they want to create a company themselves that are committed to transforming lives through real estate too. The first place we've done that is in the Bigger Pockets Bootcamp, right? I've done a lot of work with Bigger Pockets. I think that there's been 3 this year, Justin. Bigger Pockets Bootcamps.
30. At one point, it was 30 of 44 weeks we had been in boot camp this year. A lot of our weeks this year in that Bigger Pockets Bootcamp.
Yes. So there's that, and then there's phenomenal work at the Bigger Pockets conference, and our ability to work with a lot of people that are looking to grow and expand their multifamily world that we've interacted with at BPCon. And we've really, I'd like to think, made an impact and made some new friends that have potentially pulled us in new markets, including San Antonio, that Justin, with a few of our students from the Bigger Pockets Bootcamp and now part of our DeRosa Accelerator Program, have looked at new markets with us. So that's in tune for people that are aligned with that DeRosa vision, right? That want to do right by people, that, let's just say, have the prosperity mindset, okay? That agree with us on a lot of those things. It enables us to expand and grow. And so it's really about establishing a broader culture among our students as well. So Justin, trips to San Antonio, expand, making new friends in new marketplaces and stuff like that.
We
Really
had
exciting.
students that got a fish on, right? 100+ student apartment building, asked us to help out, asked us for some guidance and just further bond our relationship. And guess what? I hopped on a plane and went and did due diligence with them, right? And helped coordinate and interview property managers and all of that. And so really exciting to see the progress that they've made and a lot of our accelerator students are making. So that was huge for us because, last year we had the boot camp as well, but this year we really accelerated it, if you want to say, and expanded out the ways that we can help people learn how to do what we do through not just the boot camp, but through our accelerator, through the mastermind that we put together, through this trip to do due diligence. We even hosted an event at one of our properties, Matt, which was a lot of fun, right?
It was a lot of fun.
Got to walk a handful of people that want to get into multifamily. We walked them all around our property, showed them the financials, peeled back the curtains, had them meet the team and talk about everything from renovation to lease renewals and everything that goes into managing and running a 336 unit property, and just had a blast doing that. So I've loved this year being able to help other people see what we do, shine a light on it and help them to achieve their goals as well.
Yeah. And then the like kind of culmination of all that was our kind of spending a lot of time architecting and brainstorming what the best product to put in front of people, for people that really want to make a reasonable sized investment in themselves and their multifamily business, to get prepared to what I think is a great, changing market coming ahead of us, to architect the DeRosa Accelerator Program, the multifamily accelerator program that we came up with. And we've had a lot of great students join us. I mean, just really, really phenomenal people are part of it. We either met online or met at VPCon, but that are graduated boot camper students that are into this new vehicle that we've created called the Multifamily Accelerator. That was a launch that we did because we felt like we were ready to really start teaching people what we've learned over the years and in growing from here to here at DeRosa. How can we help people grow from here to here in their businesses and teach them to not do what we did that were mistakes and to do what we did that were wins for us, right? To help people avoid, the ropes to skip and the ropes to know, so to speak, right? And that's what the Multifamily Accelerator Program has been all about.
We talked about what should we offer, how should we offer it, and at the end of the day, the core tenet of it was it has to be truthful. It has to be from our experience. It has to be full of our real life lessons learned. And it is. And so I'm very comfortable standing behind it and pointing to every aspect of that program, saying that comes from our experience. That comes from the real life lessons that we've learned. And I think that's been what's been so powerful for people, because our students are seeing those same kind of situations. And so we're able to help them navigate that. And it's been very powerful.
I think that it's only beginning in what people are going to be able to have access to, and what they're going to be able to learn from us. So great stuff. Justin, where do you see 2024 real quick? What are you most excited about for the future, for DeRosa, for the economy? Is looking forward, where do you see the company and the economy going for 2024?
I'll start with the company because I know more about our company than the economy as a whole. So we're going to continue to do what we set up to do, pushing and driving to hit our goals. We're going to keep collecting quality staff members and hiring well and bringing people on board. And hopefully there's a deal involved. But you know what, Matt? We built our 2024 budget.
Yeah.
We're not forcing a deal. We'd love for it to happen, but we're not depending on that, because there's so many things in that greater economy, like interest rates, like asking price, like all these other things that we cannot control. I cannot control when the next deal will come along. I have zero input on that, unfortunately.
Who's to say, right?
Right.
And I think that's like the biggest lesson, guys, is for those of you guys watching, in that you got to build your plans around things that you can control, right? We cannot control whether or not the rates are going to go down by 0.5%. That'll make us being able to offer more on properties. We can't control whether or not a seller of a great deal is going to show up or not. We can't control the economy. We can only hope to participate in the economy, and we're active participants in it. So our plans for 2024 are all around like optimizing our PM company, helping as many folks as we can achieve the real estate goals, maximizing the DeRosa Income Fund. And I keep submitting to Justin other funds that we might start up because we're having so much fun. I know, right? Yeah. Other funds that we might start up as well on top of DeRosa Income Fund. But these are all things that we can have a say and a control over, right? So that's what I see. I think there's going to be a lot of opportunity, but I'm not going to build a budget around that. I just want to run a well-oiled, nimble company that's able to actualize opportunities as they show up that are within the company mission, that are within the company foundations. And if it fits the company mission, the company foundations, and the company directives, then we'll jump all over it. But those are things that are outside the budget, outside the plan, but we'll be nimble enough that we can act on them. That's the biggest thing that I think you guys can do to be successful for next year. Build around what you can control and be prepared to pivot as the economy changes.
That's it.
Yeah. So Justin, thank you for joining me today for the Cash Flow Digest. Awesome stuff, guys. If you guys like what Justin has to say, please give a like to this right now. Justin needs your likes. He needs your hearts.
Thumbs up. Yeah. All those good things.
Justin, good chatting with you as always. Great recording all those best ever shows with you earlier today.
Yep. Great to be here. Love coming to the Cash Flow Digest and love 2023 and cannot wait for 2024. Really excited about all of it.
Big opportunities coming.
Yeah.
Justin, good predictions today. Good hindsight. One highlight that I want to make here is that control what you can control and be prepared for things that are going to happen that you can't. That's it. That's maybe the theme for that conversation with Justin. So take that home. Hope that's of value to you guys, for our students, for our investors, for everybody. Thank you guys. I appreciate all you for watching today. Thank you, Justin. Thank you, DeRosa team. Have a great day, everybody. See you next week. Hey guys, Matt Faircloth here. Thank you for listening again to the Cash Flow Digest. I really appreciate you guys doing that. If you guys want to hear more about what DeRosa Group has to offer, go to DeRosa Group, DeRosa Group.com, DeRosaGroup.com online. You can hear about all the great things that we offer from an educational standpoint and passive investment standpoint on our website. See you there. And if you guys want to join our online community, DeRosa Insiders on Facebook, where you can watch this program get recorded every Friday at noon Eastern, and you can come on as even a guest or ask questions on the show. We hope to see you guys on our online community, DeRosa Insiders. See you there.